Sounds good.
All right. Well, welcome back, everyone, for the final session of the 2-day Nadex Virtual Education Summit. Today was Advanced Concepts. If by chance you missed any of today or yesterday, which was Basics, yesterday was the Basics. We did record yesterday. We are recording today. We will be editing these into a total of 8 separate sessions. We will post it to our Nadex YouTube channel. We'll put it in its own playlist to make it easy for you to find. You'll also be able to locate it on the Nadex website. We will find a way to get all 8 recordings into the webinar section of nadex.com, and you'll find them under the on-demand section. So we are going to do that as quickly as we can. There's going to be some effort involved, rendering a video and some editing just to cut them into individual pieces. With that, again, I want to thank everyone for joining us. And then I'll let Dan bring it home after his trading strangles with binaries. Dan, I am making you the presenter right now.
Cool.
And
Yep, I've got the option, so hey, we're looking good. If we have both audio and video, it'll be a good way to wrap up.
yeah, right now we're
All
seeing,
right.
hey, we got the strategy, binary option. All right, so thank you for that, Dan. You've got it. Bring it away.
Outstanding. Thank you very much, Todd, and thank you everyone for the comments. I'm seeing a lot of great comments come across. It's been absolutely fun and it's something very important to us. We're going to be looking to do more of these in the future. So if you do have feedback, let us know. I know you've been packed with a ton of information thrown at you today. So I'm going to do my best to throw some more at you and really test the limits here. So we're going to be talking about the binary option strangle strategy. Now, don't worry, it says strangle, but it's nothing to do with violence or choking anybody. In this case, you're actually hoping that the market really comes to life. We want to see movement. This is actually a strategy that's pretty common in the options market. And when I started looking at binary options back in 2008, actually a few years before I was at Nadex, trading a lot of currencies at that time, this was a strategy, particularly for people that are busy, like we all are now. We're all probably cooped up at home a lot more than what we were used to, but we still have meetings, we still have obligations, we have families. And so this is really a great strategy that I like for this. And so without further ado, we're going to get right out to it. So, all right, what we're going to do over the next 45 minutes or so, we're going to talk about the strategy, when to use it, how to implement it. We're going to walk through a trade example. I may walk through the slides, the actual words, pretty quickly, just to give you a heads up. This is being recorded, as Todd mentioned. You will get a recording of it. I really believe, like, in looking at the strategies on the actual charts, not slideshows. I actually put a few on in our demo environment this week and want to walk through those. So if it seems like I'm going through kind of quick, I just want to make sure we get the most out of our time. And I'll take a lot of the questions specifically to the strategy at the end of the webinar as we're walking through. So real quick before we begin. All right, disclosure. You've probably seen a few of these today, so I won't take up too much time, but you should know trading involves risk. Not appropriate for everyone. Sometimes it's not appropriate at the right time for everyone, right? There's risk involved. With Nadex, you can lose whatever it costs to enter the transaction. We're going to focus on that. This strategy is all about defining your risk. Pretty much every strategy with Nadex, because of the structure of the contracts, which I love, is about defining risk. One other thing I'm going to mention here, I'm going to be going in at the end of this, we're going to walk through and do like a complete process on how I would look at the markets, how I would look at structuring this. Full disclosure here, as you probably know, I'm not allowed to trade Nadex. I work for Nadex. As an exchange, we need to be absolutely unbiased. Probably many of you, if you saw my trading history, would love for me to be on the other side of your trades. Probably lucky for me, I'm not. This is going to be for educational purposes. If you have a live account, when we're walking through the whole setup, please don't take it. This is just going to be for education. I'm not going to do a ton of analysis, and I'm actually going to be using a market I'm not that familiar with to kind of put us all maybe on some level footing. So with that, let's get going. So a strangle strategy. This is a direction neutral strategy where you're really looking for volatility. You're not saying, I think the market's going to go up, I think the market's going to go down. You're basically saying, I don't know where it's going to go. Up, down, I don't care, I just want it to move. That's one of the beauties of this strategy. It's less about market timing, and it's definitely not about calling the direction. You're looking for just the market to move in general. You're looking for a low risk, high potential return trade. That's the key to this strategy. We're going to be trading it around times that we're looking for it to get volatile. In those times, you don't want to put up a lot of risk to make a small return, right? Those are the base hits. When you're expecting the markets to really move, that's when you want to go with lower risk and get that higher potential. Again, expecting volatility. This is a set it and forget it, sort of. You can absolutely set it and forget it. When we walk through the examples, I want to show you why you may or may not want to do that. It's important to have that mindset, and you certainly can, but there's also some trading decisions to be made along the way. So when are we going to use this? This is great around fundamental reports, major press conferences, things that are going to move the markets. So for example, next week, end of next week, and actually all of next week, we have a lot of month-end reports, right? We're going to have things like non-farm payroll. We have the weekly inventory, oil inventory. Earlier today, we had a natty gas announcement, central bank announcements, or just when they're giving a press conference. We're going to walk through one of those from earlier this week. Technical levels. Who here are technical traders? I know I can see the D in this because he's talking about Elliott. And so, you know, that's definitely a great technical analysis tool. If you're not, don't worry about it. But I can give you a little bit of my own history here. As I mentioned, I placed my first trade in 1997, but I didn't actually start trading until after the tech bubble burst. And so that's when I started learning more about the technicals. I was aware of the fundamentals, but I really started trading patterns and support and resistance majors, and I do time frame, multi-time frame analysis. I'm not going to go too far into that. That's a whole nother webinar. But when I first started trading the patterns, I would have a level of support, say, and I'd be like, okay, the market's going to bounce right off here. Here's my entry. And what would happen? Boom, the market breaks through, and then it's just a runner downward, straight against me. So that happened several times. So I thought, well, geez, support and resistance, to heck with that. I'm going to be a breakout trader. This is happening every time. So sure enough, watch the completion of the pattern. I'd get into the direction that was going to be the breakout. Maybe it's coming out of a channel or some other type of formation. And boom, all of a sudden it would bounce. And I actually even thought at that time, this was before I knew anything about options, particularly binary options. I thought at that time, gosh, it would be great if I could just place a trade that could be in both directions, right? Where I could profit no matter which way it goes. And that's what we're going to talk about today. I don't know if anybody else has ever had that frustration, but I can tell you firsthand, that was me for quite a while, right? Is it going to be a bounce or is it going to break out? In this strategy, who cares? You're just looking for movement, right? Another great time to trade this, anytime there's a global pandemic. So it's probably good you're joining us today. Because we've seen a lot of volatility in the markets. And I am going to focus on that volatility because this is kind of a unique strategy where you're looking for that. So right now we have daily announcements coming out of governments all over the world. That's on top of the normal announcements, which have just been, we've seen shock and awe and surprise, sometimes positive. I mean, we had home sales, new home sales, which was crazy. They're actually saying it's probably an accounting error at this point. Things are crazy, they are haywire, and that's what's great about this strategy. And one of the greatest parts is you understand your maximum risk going into it. All right, so let's talk about implementing it. These are going to be the key rules, some basic tools that we're going to walk through. Economic calendar, I love the dailyfx.com calendar. I don't know if you've used it yet, but we'll take a look at that when we walk through the process. I have never been a fundamental trader. Outside of more longer term investing, when I look at the fundamentals of stocks and things like that. When I've been trading currencies, futures, I have never been fundamental other than to know when the reports are coming out and maybe when to steer clear of the market. But for this particular one, we want that volatility. We want to know when those things are going to happen because they can give us opportunity. We're going to be talking about the ATR indicator. I think Brian did an awesome job earlier today or yesterday. I think it was earlier today. They all kind of run together. I use it a bit differently than most. This is just a small part of this. Strategy, support and resistance levels. Really want to keep this overall simple. Here are the guidelines, right? In this case, you want to execute the trades at least 30 minutes before an event. This is if you're trading a fundamental announcement. So things like non-farm, maybe it's GDP, press conferences, things like that, at least 30 minutes before an event. If you're trading technical levels, it's not such a big deal. You can do it right at the outset of those technicals because the whole market isn't watching the same level you're watching, probably, right? Does anybody know why I would say execute the trades at least 30 minutes before the event? Anybody? I'm going to give a second here because we're going to have plenty of time to go into the questions and actually walk through some different scenarios. But I'm just curious, does anybody know why? Because I want you thinking about this strategy. Kathy, you just nailed it. I don't know if we have any prize giveaways. If not, yep, Ernest, perfect. This is a strategy centered around volatility. You want volatility. You want volatility after you execute the trade, right? You don't want to pay a ton of premium when you're getting in. You want the natural flow of the market. You want to get in before that premium rises too high with fundamental announcements and with binary options. When you look at pricing of a binary option, if you're used to traditional options, right? If you're buying a call and volatility goes up, you're going to pay more for that call, right? So price rises, you pay more when you're buying a traditional option. And I know we've got some options traders on here. If you're not an options trader, again, don't worry about it. With the binary option is what happens is price compresses towards the middle, right? It's a probability. So the higher the volatility, the closer to the middle it's going to go. So let's say you were thinking about selling a binary option at 75 or 80 at one point in time. Even if the market doesn't change, the higher the volatility and also the more time, but particularly the volatility in this instance, is going to push that towards the center. So instead of selling at 75 or 80, you may have to try to sell at 65. It's not optimal. Sometimes you just have to pass on trades, just how it is. So always keep that in mind. A really volatile market, this would have been a tough strategy to do in March, even though we had massive moves. The volatility was so high, we saw in my history of binary options, in every strategy and every model I've ever run, I've never seen price compression like that. A very difficult time to really trade anything, as I'm sure most of you are aware. All right, this is where you want to look to buy low, sell high, right? And take profit orders in the mid. We'll talk more about that. If it doesn't move, get out. You're expecting movement, right? We'll talk about time and having that time, but in a lot of cases, if it moves, I spoke yesterday, if you were on that webinar, about not realizing full loss. This is so important. You don't have to wait for it to take the full loss, right? If you're wrong, get out. A mentor of mine a long time ago, 2004, 2005, he had been trading about 30 years. His comment to me was the only difference between him and a newer trader, and one that particularly wasn't making money, was that he got out of his losing trades faster, right? It's not about one trade, it's about thousands of trades. So if it doesn't move, get out. And another thing he also told me was you can't make money trading one contract. Now, you can, I've seen people do it, but in strategies like this, it's about, I think it's good to trade multiple contracts. And we'll explain why when we look at taking profits and then letting some other ones run to try to maximize value. Always, 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 sorry, I'm going off the slide here. I said 3 always, there's only 2. Always, though, use limit orders to lock in profit, always. If you're expecting a fast market movement, right, set your profit targets, at least for a partial position. If you don't know what a partial position is, we're going to cover that. But lock in that profit. Markets can spike. You can be correct for a matter of seconds, but before you can get to your mouse and click it, it's gone, right? Be prepared prior to the trade. Here's the basic structure. we're going to look to sell an in-the-money binary option at 75 or higher. On a limit order, we want to take our first profit at a level just over 50. So say, for example, we sell at 85. Our first profit level is going to be around the 53, 55 mark. You can work with that, determine your own. That's my rule of thumb. This is the basic structure. There's going to be two legs to this. What I mean by legs is we're taking both sides of the market, right? We don't care if it goes up or down. We want at least one of them fill. Ideally, both of them would fill. So in this case, we're going to buy an out of the money binary option at 25 or lower. We try to keep these two legs as symmetrical as possible, even though it doesn't always work, but it's very easy to do with binary options. On this limit order, you're going to take your first profit just below 50, so maybe at a 45, 47, 48. So let's walk into the examples. Hold on, I'll flip back real quick. Just before we get into the examples, everybody good with that? We've got two legs. We're selling one of them that's in the money, over 75, and then setting a profit target. Maybe it's 30, 35 points. The other leg, we're buying low, below 25. Maybe we buy at 15, and we set our first profit target around the 45 mark, right? We're not looking for necessarily a home run on all of the contracts. All right, so this is good because we're going to have plenty of time to walk through the actual, what I would think is the meat and potatoes. All right, so here's a trade example. Literally, I was putting it on for this presentation earlier this week. By the way, does anybody know my my rule? And there's going to be a test on this later. Does anybody know my rule on the single most important way to become a better trader? Anybody? I know I've done this in webinars. I'm actually going to do a whole nother webinar, right? You know, yep. Practice, study, don't lose money. Practice, yep, absolutely. You know what? Actually, I'll make one other point real quick. The worst thing I've ever seen happen to people when they start out trading is that they make money. The reason why I say that that's bad is because all of a sudden is worse than actually losing all their money. Because if they lose all their money, and I've seen this literally thousands of times, when they lose all their money right away, they tend to take a step back and then they refocus on the market and they kind of do their education. By the way, some great answers here. I'm going to touch on those in just a second. But when they make money right away, let's say their first 5, 6, 7 trades, and I've seen it more times than I can count, they make money on every one of them. And all of a sudden they're market kings or queens, right? The world is their oyster and they're rock and roll. The markets are easy. Let's get after this. And then all of a sudden they start taking some losses. And then they'll double up and then their money's gone right away. But instead of stepping away, they're trying to chase that win again. And they start chasing the market. And I've seen them, then they throw another 1,000 at it. And then they lose that because they didn't take a step away. It's so important. And on this practice and study part, absolutely. I've seen 100% that people that do things like attend these webinars and actually don't just try to mimic it, but try to learn and study it. That's the important part. You got to put the work in yourself. We can give you some answers, but all of us are different. So you have to practice and study. I'm going to take that a bit further because it's important. I read a ton of books. I watch a ton of webinars to this day. One of the things I love about the market, it is a never-ending puzzle that can never be solved. All you try to do is get a bit of an edge, right, in that market. Try to make more money than you lose. Simple as that. The best way that I know how to do that, also, I talked about trading patterns, and we'll talk a little bit more about that in a bit. There are patterns in the markets, but the patterns you need to master are the patterns in yourself. So I'm going to repeat this later on because I think it's so important, and we're going to be looking at some screenshots I took. If you want to be a better trader for 10 bucks, I'm going to tell you how right now. Every time you place a trade, take a screenshot of it, right, at the entry. Drop it into something like a PowerPoint document so that you have it there. Annotate it however you want. It takes a second, boom, right? And then you can do it during the trade and then particularly at the close of the trade. So you have your full trade history in visual format. Very important when learning technicals, right? You have it in a Word, you have it in a PowerPoint document or some other document form you like to use. If you don't have one already, go to your local office supply store, get a 3-ring binder, a ream of paper, and a 3-hole punch. at the end of the week or the end of the day, print out your trades, organize them however you want. Maybe it's by market, maybe it's by strategy that you used. I like to do it by strategy and then by market. The importance of this is so fold. By the way, it might cost more than $10 if you don't have a printer, but you can get printers pretty cheap. You need to print them out. You need to be able to spread them out. If you just leave them electronic, you'll never go back and revisit them. What you will absolutely find, not on one trade, not on two trades, or even probably 5 trades, but what you'll find as you go over time is that you'll be able to lay these out and you'll start seeing commonality between these. You'll be able to identify the pattern in yourself and you'll become a much better trader as a result. I am not kidding on that. That is one of the most important things you can do for yourself. You're already investing a lot of time because if you're talking about practicing and about studying, you're losing trades you've paid for. If you don't learn from them, you're missing out, right? That'd be like paying $40,000 a year to go to college and never even opening a book, right? I mean, I can't really speak to my college history that I was that great at opening books, but I managed to muddle through. But seriously, that is the best way. I can show you where some webinars that I present that on, but do that. All right, let's walk through a trade example. So this was, I was looking at this presentation this was Tuesday night. So here's the Euro USD. So we're just going to walk through this. I'm going to try to use the tools as much as possible on here. So we had the Euro USD, in case you can't see it, it was right about 109.80, right? And we're going to walk through this whole process. I just kind of want to give you a flavor of how this looks. So we had Euro USD trading at 109.80. You can see on the bottom strike here. Let me do the spotlight. So right over here, the bottom strike, 109.40 and 1.1020. Now, I already looked, and we'll talk about the ATR, the average true range, in just a bit, but I saw that the average true range over a day was about 70 on the Euro USD, right? So these are 60 pips apart, but I had some time. Now, typically, if it's only going to move a total range of 70, that means high to low, not just in one direction, 60 pips might be too far away. But in this particular case, we had Christine Lagarde, chief of the ECB, speaking overnight. So this was put on, gosh, I don't know, 8, 9 p.m. And 8, 9 p.m., this was the market. It had been relatively flat, like, right? It's kind of going between a 20 pip range here for the most part since the close of the previous day. So what we were looking to do was take both sides of that trade. And so right here, we had these two. Indicative when the trades were placed was, they were right around 109.82. In this case, I placed 10 contracts on the short side. So I sold the in the money at an average price of 86.75, right? Bought 10 contracts at an average price of 15.5. So fairly even risk, right? And this was right after the trade was placed. So you can see I'm automatically down about $132, right? That's simply the bid offer spread across those 10 contracts on each side. So when you get into this, and you'll know what your maximum risk is. So if this trade is placed, right? And let's say I'm placing this trade. So I'm just going to use round numbers to make the math easier for me. Let's say I sold at 85 and bought at 15, right? I would have 15 points risk on each side times 10 contracts. I'd have $300 total risk. Now, if I was doing this prior to a news announcement and it came out and nothing happened, I might want to try to close that out, right? In this case, though, we still had 16 hours to expiration, right? We've got our contracts on. This was the start of the trade, right? By the way, what's the next thing I want to do, right? So I've got these contracts on. You can't see them. I don't think it's on the next screenshot. Give me 1 second. Now, I'm going to walk you through that. My mistake, forgot to take that second screenshot. So I actually had 2 working orders on, right? So we sold one at 86.75. The first take profit order for 7 contracts, not the whole position, but 7 contracts, was set at 55, level of 55, right? So take 7 of those off, let 3 run. On the other side, bought at 15.5, that first take profit target for also 7 contracts was set at 45, right? Because if we've got the head of the ECB speaking, things can move really quick, right? So let's take a look at what happened. So let me go back to the spotlight. I'm going to bring this up here real quick, but let me go back to the spotlight here. So the trade was placed somewhere right over in here, right? So most of the night, it didn't do anything. I was curled up in my bed. That's what we mean by set it and forget it. I was, probably dreaming of trading riches or something foolish like that instead of putting in the work. So market comes out right about here is where the head of the ECB starts speaking. And the first thing she said was that the impact of coronavirus on their economy was not going to be mild, but it was going to be at least moderate to severe. Boom, sell off in the euro. This is the importance of limit orders right here. This is where the limit order got filled. It literally hit that strike price. And right after this comment, she followed it up. So we're about 15 minutes after that comment. She followed it up with no longer long-term impact to the debt structure of the euro. All of a sudden, it's Ralliesville, right? It actually ran up then to the next strike. In this case, limit order got filled. I was asleep through this whole time. If I didn't have limit orders there, I'd actually walk in the next day and it might be back in the range. And right? And then all of a sudden, hey, the market did exactly what we wanted it to do, but then we didn't. So now you can see if you look down here, we had 10 contracts on each position, actually filled 7 of those contracts overnight. Didn't even do anything, right? And we still have over 2 hours in this contract. Now we're looking again. So we're way off our lower strike. So that's pretty much void at this place. We don't have to do anything. We can't close out. If the market would drop severely, maybe we can make money again. But right now, we've got this one, right? We're just about at our strike. We're back at 45.75. Now, whether you're trading directionally or trading this strategy, right? One of the things here that we want to keep, and this will be on the technical side, is if you look at this, from a technical side, we really had a triple top right over here. Then we had a big down move. It's struggling kind of to get back to this level. I don't necessarily, even though I left 3 to run, maybe if it's sitting up here, I just let them go. But in this case, I might choose to manually close this out. Something to think about, right? I'm up $90, right? Right there on those 3 contracts. This is with 2 hours and 15 minutes left. So real quick, let me hear who would let this run versus who would close it out. Go ahead and just type it in the question box. Just say run or close. Yep. You know what? I'm seeing them come across. Some people are saying run, some people are saying close. Now, 2 things on that, right? We've already had a great trade. We have gotten to profit quick. We've got profit locked in. So really, we're not making a terrible decision either way, right? So we could do either. Now, if I'm sitting here looking at this, and a lot of it is, I know somebody mentioned earlier, they look at price action. Love price action. I think it's so important, particularly when you're watching it hit key levels. In this case, we had $90, $30 profit. We could have made another $150 on this, right? So it's kind of one of those toss-ups as to whether we let it go or let it run. In this case, and it wasn't the right decision in my book, and if it was my real money on the line, I would have closed this trade. I would have said, good enough, because one thing to always consider is not getting greedy, right? We've already had a great trade, so there's nothing wrong if you let it run, but also keep an eye on that floating profit and loss, right? Because you can lock in another $90. Because as we go, this is the next, it was actually about 12 minutes. So because we're starting to get lower on time, it went from a profit of $90 to a loss of about 15. It was actually 90.75 to a loss of 14.25. So we had a value change of about $105 in 12 minutes. Now, I don't know what you all do for a living, but does anybody make $525 an hour? Right? If you do, I don't know why you're trading, right? I mean, unless you're just really have it for fun, right? But that's what that represents. And that's why in that case, I would actually be a fan of closing it out. Now, if you only had a profit of, say, $30 and you still had a lot of upside, then you're not really risking that much, right? But I've seen so many people that'll sit there and they're literally at a profit of like $90 per contract or $80 per contract, and they're holding out for like another $6. Close it out. Don't get greedy. So that was the one from earlier, and all of this action right here in the center was based on that press conference. All right, this is one from earlier this morning. Let me go back to the spotlight, and then we'll go into the charts. And then we'll go into the charts for our last 15 minutes and walk through this. So I actually put a couple of trades on this morning. Now, silly me, I was thinking I was actually going early today, so I put one on natural gas because there was a natural gas report out earlier today. So I was expecting some volatility. I put the trade on right about here. As you can see, we had about 40 cents up and 40 cents down. So in this case, before I could even take the screenshot here, actually I took one, but this was a better screenshot. Right here is where the report came out, and it automatically dropped, right? So we had a big move down, right? So we got filled on one side. The last one was ideal, right? The last one was absolutely ideal because it filled on both sides. That's not always going to happen. That's really maximizing the trade. So in this case, though, we've got another choice. I can kind of almost tell by the previous answers what you guys are going to choose to do here. But on fundamental announcements, right, and this is, again, the importance of limit orders, right? It came down here. Now we're kind of stalling out a bit. In this case, we're up $178 on 3 contracts. The current price is 28.25. Our best case scenario, because we sold, is 0, right? So we've made about 60 on this. Do we want to risk 60 for another 28 when we don't know what's going to go on, right? 178.50, right? And you can see here's the Euro USD trade I also had on, which we'll walk through in just a second, right? In this case, you might just want to take that off, or maybe even take 2 of the 3 off and just say, you know what? I'm going to let the last contract run because it could run down here. You could maximize it. Now, if it's all the way down here, we've got a little time to sit there and wait, right? But again, in this case, I'd probably take that trade off, locking in 178. If my maximum, if I can make another 150, I'm better than a 1-to-1 at that point, and I've already had a profitable trade. Why not call it quits? So let me hop into the platform here real quick, and we'll walk through. Hopefully my chart's still up. We'll walk through. I don't think I have another slide here. Let me just make sure. Yep, so let's flip over to the platform. Okay, so here was where we got into that trade. Right in there. The trade was placed about 8:20. This morning, report comes out at 9:30, or excuse me, 10:30 Eastern, right? This is where we were making that decision, right? Whether we stay or get out of the way. Now, at the end of the day, this actually ended up closing. Right here is where the expiration is, right? So this upper dotted line was the buy binary. This lower dotted line was the sell binary, right? The market's now closed, so the strikes are gone, so I put those there to market. So if we left the 3 on, right, it would have ended up, they would have all settled at 100. We'd have made an extra $150, right? But this would have been a whole lot of heat to take. This is why I say, you know what, it is somewhat of a set it and forget it, because you're still fine. You made more than what you risked. That's great. But if you're watching it and you know that there's something scheduled, this is a great time to look at it, right? Because I don't want to sit there and take all this heat, right? Why put yourself through that? That was like another 4 hours, right? So those are things to think about. It is set it and forget it. If everything happens overnight, great. But if you have an opportunity to make a trading decision, do that. So I'm going to hop over here to another trade real quick. And then with the remaining 10 minutes, let's walk through. So we've got the Euro USD. And give me a second to bring this up. So I'm going to walk through the concept here on this Euro USD trade. So I talked about time frames. One of the things that I always want to do, I don't care what time frame you're trading in. I always, a good friend of mine and a great educator and trader always has the saying that if he makes a mistake, it's because he didn't look far enough left, right? So I'm going to go out here. I'm just going to go to a daily chart real quick just to kind of see where I'm at, right? There's that old saying, can't see the forest for the trees, right? That's kind of a 5-minute chart. You're in the middle of the forest. You can't really see where you're at. This is like looking out over the whole park. And so we can see, and we actually had a breakout higher over these. What I was initially looking at was kind of some support and resistance here, and then where our next level would be. So we kind of had some resistance up here next on the daily around 115. I always like to be aware of where we're sitting. So now I'm going to go back to the 5-minute. I would typically, for sake of time, I'm not doing now, but I would look at like a daily or at least an hour chart and kind of get those bigger levels, right? So on this, and I'm just going to bring up here the average true range, right? Average true range was just about where we saw it before. Oh, I'm sorry, this is on the 5-minute. For the longer term, because we still have over almost 15 and a half hours in this, we're actually up around, if we look at it on the daily, it's about 70. So I don't know if I'd always take this trade if there's nothing really happening. This was going to be my example of something that I probably wouldn't do, and that's why I say it's 2:30 in the afternoon right now for me, 3:30 for a lot of folks. Things are kind of slowing down. So if you're doing something, if you're looking for overnight, which we'll do in just a moment, understand what your time horizon is, right? It might be worth paying a little bit of premium to have a little extra time, to do that. Now, the great thing about the time is it can actually make a move. I was fully expecting, by the way, when I placed this trade, which was right around in here. Yeah, it was right around in here. I was fully expecting that it would kind of be sitting right around here still. So I could talk about the doldrums of the day. Instead, it actually continued to climb up here on this 5-minute chart. It's actually getting pretty near this strike price, where it would, where if it hits that strike, and by the way, that's where I set my profit targets, because the rule of thumb, right? If it hits the strike price by rule of thumb of a binary, it should be trading around midpoint of 50. Now, if there's volatility, you might see bid offer go a bit wider. So that's why I would say, you know what? Don't get greedy. Set it on the case of underneath at 45 or on top at 55. All right. It doesn't have to hit that 50. That's the profit target you're looking for. So we can wait overnight and see how this works out. Now, in this case, right, not really up. We're up only 12 bucks a contract. Lots of time to go. So this I just let run, had our risk situated. So, all right, so I'm going to walk through a full scenario here. We've got about 7 minutes left, and I want to make sure I get, this has been a great audience, by the way. I want to make sure I get some time for questions. By the way, I'm willing to stay on a little bit longer. That is the benefit of being the final presenter of the whole summit. And we can take a little bit more time. So I'm actually just going to go over here to the markets tab. I used to trade this quite a bit back in the Forex days when I was trading spot, but I haven't traded in a long time, and it was one. So right now I'm going to look at the Aussie yen, the daily binary, and one of the reasons why I'm going to pick this one, not magic, right? Think about when you're thinking about particularly currencies or any other market, think about what's going to be happening over those times, right? When is the Australian market most active? When is the Japanese market most active, right? Typically right around evening time for a lot of us, or into the morning hours, depending on where you're at. But here in the US, that's typically later into our evening and into our early morning. That's why I'm going to be choosing this one. So I'm going to be looking for something. I'm going to actually choose, and I'm just going to go ahead and hit a strike here and bring up the chart. And then we'll take a look. So one of the things, and I'm just looking at Aussie yen, right? One of the things I'm going to look, and I'm going to flip over to the daily FX economic calendar. So I'm going to look at today, right? Is there anything coming out? Now you may even do this first. This might be how you pick your pairs first, right? And be aware. So anything in Japan or Australia. So in these, and one of the great things about this calendar is they actually tell you typically the impact of the report. I typically look for medium to higher, right? Because we're looking for something that really is going to kind of impact the market. I don't even know what the jobs application ratio is. Maybe it's important to somebody or some market, not necessarily to me, right? Retail sales could be, or industrial production. That could say a lot, particularly in today's, what we're going through today. So right? So we've got some things going on in Japan. We also have some lower kind of impact reports out of Australia, right? So just looking here real quick, see if we see anything else. I'm gonna flip to tomorrow as well because that'll cover my overnight hours. Oh, we also have consumer confidence and housing starts. Now, one of the things that could be interesting about this is because there's actually quite a few medium reports coming out of Japan. Now they might offset each other, right? Or they could kind of cascade. They could give us that movement we're looking for, right? No guarantees, but that's what they could give us. So it looks like, okay, Aussie yen, let's do it. One of the things that you can get, and I don't shy away from it, or I wouldn't shy away from it, I would say, if you see like 5 reports out of Australia and 5 reports out of Japan, those could be great circumstances to get those big swings that could actually fill both sides of this trade, right? So, but again, medium to high reports, this is at dailyfx.com. Underneath their calendars. Just go to their economic calendar. It's absolutely fantastic. Oh, by the way, real quick, while we're here, I'm just going to go to today. So when I was looking at that natural gas trade, right, we had quite a few energy reports coming out, and right here we had the natural gas stocks change, which came out a bit higher than expected. We saw the market drop off of that. So, right, those are the things we're looking at. All right. So we've got Aussie yen. So I'm going to walk through this real quick. So we just discovered, hey, there's some reports coming out. I'm going to go out to our daily contract, or excuse me, not daily. We're already on the daily contract. I want the daily chart. And I just kind of want to see where we're at, right? We've been in a pretty decent uptrend. No big deal. I'm just looking to see right now, do we see any real big support? I mean, we're kind of right over this support now. One of the things also in theory that I'd be looking at to do when I'm looking at these is, in theory, when I'm using technicals, if I see a big pattern on a daily chart, oftentimes the reaction to that support or resistance is much greater, whether you get the bounce or the breakout. So that's always good to know because that can also be another signal. And if you see a similar pattern that's completing in the same direction at the same time on a lower time frame chart, that adds a confirmation and also a bit, you know, I guess more fine-tuned approach, particularly if you're trading something like a touch bracket or a spread. With these, you don't have to do that. All right. So let me go to the interval. By the way, I'll be showing like some different things here. So we can choose, like if I wanted to show 1 day of daily, somebody just asked that question. It actually moves, that's 1 day. So it'll change my chart to 15 minutes because that's the time frame that I'm looking for. So here we have the 15-minute chart. We actually just had a little bit of a move, but I'm gonna go out here. You know what? I'm gonna go out here just to the 5-minute chart as well. And again, don't follow along in your live account, okay? We're just taking a look here. Now, one thing I should have mentioned when I look at the daily is that's where I like to look at my ATR. On the daily, I use a 14 period, and we're moving about a 1 even roughly, right? Some people will actually put this out a little bit farther. They might use the last 30 days. And so the standard setting is 14. Again, this just gives me an idea, high to low range, lets me know if something's moving. If I see it really high, like back here, you know, if we had a lot of volatility, it might not be the right time to place the trade. And I'll talk about the multi-contracts also when we go through here. So in respect of time, going to do this fairly quick, right? So we looked at the ATR. Right now we're sitting here about 71.48. I'm going to be looking in this case, right? I want to buy in out of the money. So if I'm looking at this, and I know just on kind of the average day, right? We're at about 71.5 right now. And I'm looking for it to move just about 1 on a day, right? And I've still got, in this case, 19 hours to go. So even if that's like a 50, so if it moves half that, I might even look at this strike. So I'm going to go ahead and just take this. Again, I'm not doing a ton of analysis. I just want to show how we execute it, right? I'm going to take this at 975. I'm going to put it on 10 contracts. Now, if you trade 1 or 2 contracts, 1 is the minimum, right? My max loss on 10 contracts on this side is $197.50, not inclusive of exchange fees. I'm just going to go ahead and place this order and place buy because I don't want to get these kind of trades in yet. So, right, I was about 60 cents off there. Now I'm going to look for my other side. Where am I going to sell? So we've got a 71 that's trading at 86, right? That's kind of, if we look at this, I can get $4 more by choosing this lower, but it's got to move a whole nother 20 ticks, 20 pips on this. I might not want to risk that for $4 more in each binary, right? So I'm going to take that. It's a little bit symmetrical with the last one. I'm going to sell this contract. I'm going to do the same thing. I'm going to sell 10 contracts here. Okay, so I just sold 10 at 86. Now what I want to do is I want to go in and put in my limit orders, right? So I'm going to do what I did before. And if you choose to do them a little bit differently, that's great. So I'm just going to click on, I always click on them from the positions window. So this is the Aussie yen 71, right? So it's going to open the ticket to the opposite direction. So I sold, so now I'm going to change it to a limit order, right? I sold at about 86 and a quarter. So I'm going to set my first limit at 55, and I'm going to say 7 contracts. Now you could say you want to take 5 off. You can set multiple limit orders. So you could say 55, I want to take 5 off. If it gets down to 50, I want to take 3 off. Then I'm going to let the other 2 run. Just going to set this up nice and simple, right? So I placed that order. Give me 1 second. Okay. Let me make sure. Sometimes on these webinars it acts a little bit slow. Now I'm going to go to my other one, and this is actually a good learning lesson. I'm going to go, we bought about 9. I'm going to go to my limit order. I'm going to put a price of 45, right? Because if it hits that strike, it's going to trade somewhere around a midpoint of 50. I want to adjust a little bit for bid offer spread. I'm going to close out 7, and I'm going to click place order. Now, one thing I'm going to do here, right? I have 4 positions on, but I can automatically see over here, I have 5 working orders. So I have 2 of them on here on the Aussie yen. Always double check this. So what I'm going to do is I'm going to click on this. I'm just going to delete that order, right? Because I don't want to end up in an opposite position. I don't want to have more orders on working on my limits than I do on my positions. All right, so we've got our trade set up, right? So now if it moves to either of these levels, right, we should get filled on our limit orders, right? We know what our risk is. I can walk away now. I can do whatever, whatever I need to do. If I have a meeting, I can go to a meeting. If the market moves and it goes to where I was hoping it did, and I hate the term hope, but in this, we're not really doing a ton. We did some basic analysis. Now I've got my limit order. Now I'm going to ask a question. I'm in my trade. I've got my limit order set. Got the market. We're good to go. What is the very next thing I do? Okay, a couple people got it right. This is awesome. I am so happy because this is probably the first group that's ever remembered that. And I like to stress it. Absolutely, I take a screenshot of it. If you're using your PC, you just hold down the Control, Alt, and Print screen, and it takes a snapshot of it. You go into like a PowerPoint, you just right click, hit paste. You can type on it. I like to take a little bit of notes. If you're using like different patterns, or if you're using different indicators, you know what, it'll all be on that screen. And then when you go back and look at them, another important thing that does is we all have tough times when we're traders, right? We go through stretches. And that's where kind of the mental aspect comes in, right? Comes in when you're doing well also, right? Because you don't want to get greedy and all of a sudden you're tripling up on your positions. That's the immediate death signal to me when a trader does that, right? Always go up in increments of 1. But when you're having those 5 trades in a row, 7 trades in a row, maybe 10 trades in a row that have all gone against you, and you're feeling kind of mopey, and you're starting to get tested mentally, and you're getting angry with the market, and you're getting tempted to say, this one has to work, I'm going to triple up, take a step away, go pull out your charts. What you'll find is you went through that exact same scenario before, and then you probably rattled off 10 or 15 or more trades that made you money. Right? Happens to everybody. Also, if I place this trade and I can look at the market later, this is particularly important. To go back later. If this didn't do anything, by the way, if I was expecting this announcement to come out in the next half hour and nothing happened, actually, let's say that the announcement just came out, and sometimes there's a little bit of delayed reaction. Let's say the announcement just came out, but all of a sudden the market for the next 15 minutes just ticks back and forth, right? I might try to close these trades out at not the complete loss. It kind of depends on where it's sitting. But that might be something I'd consider. If I bought something for 20 and it's sitting there and I can close out for 10, I cut those losses a little bit. Even if it's $2 or $3, sometimes it's worth cutting those losses. Here, though, we still have 20 hours to run, or just over 19 hours to run. A lot of things coming out overnight, and we can see what happens. But right now, if I have a meeting to go to, if I have, maybe my kids are screaming for dinner. I don't have any kids, so they're never screaming for dinner. But if they were, hey, I can go hang out with them. I can spend quality time, because isn't that what trading is about? And by the way, if somebody ever asks you why you got into trading and you answer to make money, shame on you. And I'm going to explain that. Yes, we all want to make money when we're trading, but always make it real. As part of your trading plan, always think about what it is that makes that money real. Is it, hey, I want to have a little bit of supplemental income. Maybe if I trade for a year, I want to be able to afford a nice vacation for the family. Always put something tangible associated with it. You're doing yourself a disservice, and it's an absolute cop-out with just saying, oh, I just want to make money, right? I mean, really, we probably go to work every day. Yeah, we do it so that we can afford things and make money, but we should have goals. And if you want to go ahead and do this in the demo, also just see how it works out, or practice these a little bit. See what you think. Do some virtual trades. If you want to do it in the live environment, I'd say when you first do it, just annotate your chart, right? So if you want to annotate a chart, just go here to the drawing tools. Go to a horizontal line. Just throw the horizontal line on the chart and say, boom. Sit there and okay, now I can put notes. I can go to my drawing tools and I can say, I can go to my text. I can take a text box here and I can just say, okay, I sold at 10 at 87, and hypothetically I have a limit at 55, right? And the reason I like doing this in the live account is because there is a difference in pricing a bit, right? The demo is just the demo. It's not there to teach you how to trade. It will always be different. In the case of the live account, the bid offer spreads are actually typically much tighter. Not in every instance, depends on what's going on, but across the board, on average, much tighter. And so you can you can practice in the live, just you don't have to place a trade, right? So you get the real environment, and then just watch. If it goes to the strike, it should be trading somewhere around 50, so you can get a really good premise. So you can practice it in live without actually placing live trades, risking real money. Let me see, just got 4 or 5 more minutes here. Yeah, so this is a great question. Yeah, so like with news, and I typically look at a higher time frame. Now, when I'm trading, and as I mentioned, I'm not allowed to trade Nadex, but I trade stocks, ETFs. I've traded futures and Forex for a long time. I tend to mark up my charts. So at the beginning of each week, I'll typically look at a longer time frame chart, such as a daily. I only typically trade a handful, maybe 4 or 5 different instruments. I'll look at that daily time frame, and I will pick out key levels of support and resistance, look and see if there's anything. But then I'll also look at what the ATR is. Now, if I'm looking at the average true range and I'm expecting to do this on a short term, right? Because I'm showing you the dailies for the sake of not having things flying around. My opinion is it'd be tough to do this on a 5-minute basis because they do fly so fast, or even a 20-minute. But let's say you're looking at something like a 2-hour binary. You can do the same thing, but at that point, you don't want to look at the daily ATR. I might consider looking at like a 15-minute, 14-period average true range just to kind of help set the levels, right? So it depends on how long you're going to be in the trade. Since these trades, we're looking at 15 and 20 hours yet, or 15 and 19 hours yet, I would actually look more at the daily chart because that's more consistent with what it is. Let's see, as far as the best time to trade Forex binary options, I think a lot of it depends on your strategy, really around the clock. And one of the things, I showed you like a strategy where we're expecting volatility. You can do the opposite also. There's you can actually build instead of if you're expecting a very flat market or the market to not be moving at all, say over the next 2 hours, you can buy. It's basically like a premium collection strategy. So if you're expecting the market not to move, right? In that case, you might buy like a binary at 80 and sell a binary at like 20, right? You're putting the probabilities in your favor. You're not expecting movement. You just want time to erode and for them to settle at 100 and 0 respectively. You're putting up more risk to make a smaller return, but that's because you're trying to play a flat market instead of a volatile type home run market. So really all around the clock, and it really depends on the types of currency pairs or the currency pairs you're trading. I think the worst time to trade is between 5 and 6 p.m. Eastern, not because that's a bad time to trade. Although I will say it gets a little sketchy because that's when most banks do their what they call the roll, where interest is paid or received. You get a little sketchy, and this is not just Nadex. This is just the interbank market as a general. But also between 5 and 6 Eastern on the Nadex specific, we're closed then, so it's really tough to trade. Outside of that, like if I'm expecting, I mean, when I'm looking at 2-hour binaries, and you're not expecting anything to move, you could do like a premium collection. If you're seeing fundamentals come out, then you might want to do a volatility strategy like this one. I'm going to try to take a few more questions here. And so I've got a question about, okay, so on the Euro USD trade, let's pop that back here. So right now I'm down 117.50, and I think the question is, would I take that off? No. Not at this point. One, because it's already almost at my worst possible price. I can only lose another 75 cents on this trade. So I'm going to let that run. If I'm ever at maximum loss or that close, I'm just going to let it run anyway. And in this case, a lot of things can happen in the next 15 hours to see what happens. But I have my limit order set out there. And the importance of this is right now I'm up 80 bucks here, but I'm really not up that much. I've got time, but again, if this was a case where I'm running out of time and I can pull in 75 bucks or risk not getting anything, I might take that 75, 80, close it out, take a smaller loss, right? Hopefully that answered the question. By the way, if you have questions, we're going to be reviewing all of the questions after these, see how we can do better on these webinars. So we're going to be looking at the questions. If there aren't any that got answered, there are a lot. Unfortunately, I would probably have to be here till midnight, which is awesome. Let's see here. Yeah, so I usually use the ATR, and then I look at like half of it as a directional. Now I also look at the market, something called harmonics, and I'll just kind of try to briefly explain what I mean by that. And let me just go out to a daily chart again. I kind of look to see like what may be happening. So I may or may not find any good examples here. Sometimes the markets are really moving in what's called a harmonic, meaning they have about the same tenor, right? This can also be an expectation. So from there to there, not really. It's been kind of all over the place. If I'm thinking this is going to go up, this, by the way, isn't a pattern. I'm typically looking for a pattern when I do this. But in many cases, you might find, so let me just run this one back here. Oops. and just see like what the tenor of the of any of these moves are, right? Maybe it's a bit smaller. I mean, from this high to this low, not too far off. Here we had volatility really expanded. And so you can gauge kind of markets. Not great examples. I'm running through it kind of quick. But yeah, I typically will look at the ATR. But then with the ATR, I kind of look and see, is the market picking a direction, or are we getting really choppy? Meaning, yeah, we're hitting high and we're hitting low, but it's basically staying at the midpoint of the ATR. Or are we kind of in a trend where the ATR is going to tell me we're getting more of a 70-point move consistently, and it's consistently directional. So there's a couple different market conditions, but that kind of all comes with with studying it, and most importantly, what? Taking screenshots. All right, well, I think I got to most of the questions. I want to thank everybody for joining us. I hope you had a great time at this summit. By the way, if you send comments to townhall@nadex.com, we'll get those and let us know what you'd like to see for these. We want to do a whole lot more of these. They're very beneficial in every capacity. But we want to know what it is. I mean, do you want me to do a webinar on how to build a trading plan? Do you want to see strategies on how you use our call spreads with our knockout type options? Do you want to look at knockout strategies? I know Markets had a great strategy on knockouts. These are the things we're looking for, and really want to give you quality education in this respect. So again, that's townhall, all one word, @nadex.com. Shoot it there, and we'll share those findings as well as all the questions that were asked. We'll get a report at the end of this. We'll make sure that they get addressed, even if we have to send an email later. But absolutely, just want to thank everybody for joining us. And everybody stay safe, stay healthy. Wish you all the best. And you know what? Study, study, study. How do you study? Take a screenshot, something to go back to. One of the most important things. You can read all the books in the world, and it will not help you nearly as much as if you learn your own patterns and how you trade. So everybody have a great day.